Yes, hello guys, welcome to another video. In this video, I'm going to be sharing with you some of my secrets in trading gold and euro. Apparently, I'm so focused on gold right now, and I'm not really going to be focusing on any other pairs like Nasdaq and so on, for the sake of clarity and having high probability trading setups. Okay, so that being said, let's jump into it. There's something that most traders doesn't really know that. There's SMT that you can use in gold, and it is SMT between gold dollar and gold euro, XAUEUR and XAUUSD. That's gold USD and gold euro. Okay, so they often usually move together, just the way GBP USD and Euro USD do move together. So whenever you see GBP USD or Euro USD is not moving into correlation the way it's supposed to be. For example, one pair has taken liquidity, the other has not taken liquidity. That simply means that price is likely on an SMT. So I want to take a look here. I want us to first of all start with here why I bought gold. From this Monday. That's last month, right? I want us to mark this low. This is the low we have here. And mark the dates. Remember, the dates are very important. We just don't mark the lows without having specific dates. So we have, for example, this was Thursday, 15th May 2025, right? Or 15th. Let's go to gold US dollar. Let's look for 15th May. 15th May 2020. Or Thursday. No. Where's 15th May? Where's 15th May? Where is it? Where is it? Here we go. Here's 15th May. The 16th. Where's 15th? Here it is. Perfect. I want to take a look at how different, or I want to see something going on here. This is the same date I've marked. This is 15th May 2025. This is also 15th May 2025. Okay? This is the low, and this is the low of that day. I wanted to see how price reacted when you're approaching this zone here on Monday, that is on 30th June, which was literally the end month of last month. You see, we came and took this liquidity here on gold euro. Euro came and took liquidity of this 15th May. I want you to pay close attention here. But what happens with gold dollar? We never even came close to it. This was the Monday, the 30th, that this law was taken on euro. But you see, that Monday, instead of taking this law, we were still stuck in that bullish fair value gap. So this is what we call SMT. And I like using the high time frame because this one is way more powerful than the short, like the short time frames. Okay. This is now SMT, smart money divergence, or smart money techniques. Smart money divergence technique. Okay. That's SMT right there. This one here, this is our SMT. And it's SMT because these two assets or these two pairs are supposed to be moving in correlation. And guys, I want you to note carefully. I did not just come here and mark this one. I used specific dates. Specific dates. You have to ensure that you use specific dates. And you see, it is the same technique I used some months ago here to give me all this bullish move. You see that? It's the same technique I'm using here. So when I told you guys last week that gold is going to be going higher, I don't expect it to come even anywhere below here again. And for traders who doesn't even know how to trade, that's why I told you that in the previous video I was making about consistency into winning. I told that entries should be your last option. Once you know where the market is going, the market can just open here on Monday and you just buy here, boom, put your stop loss down below here because this is not supposed to be taken. And what do you target? Target the all-time highs, and you just go do other things because this is going to take some time. This can take even a month maybe for us to be able to tap up here. Okay, that's 1 to 3 hour. You have done nothing, like you have no pressure at all because you have done your analysis and you understand where the market is going. So but if you still don't understand where the market is going, you're still gonna be stopped out because maybe you'll enter here and come and put your stop loss around somewhere there. But maybe price will want to come and revisit this gap here. Okay. So entries, I told you entries should be the least of your worries when you understand what the market is up to and you want to you want to trade stress free. Okay. So that's SMT. That's number one. Number two, I want us to also look to something here again that happened last week, and it was SMT inside SMT. And this makes it more powerful because, guys, if you understand the higher time frame, what price is doing on specific dates, and that gives you confidence that now in the lower time frames you can be able to seek entries that align with that higher time frame bias. So I want us already we knew here we have a CMT. Now let us take a look at last week. Last week I was telling you guys that we are going higher. We are going higher. You see, this reversal we had on Thursday, it's supposed to happen. It has to happen. You see, the fact that I say that we are going higher, I'm saying we are going higher on the long term. But even if I say we're going higher, even here, when we people were buying here, you see this day we went higher, the next day we came low, higher, higher, the other day, low, high, high. Like price has to fluctuate because that is how delivery is engineered. Okay. So you have to know the accumulation, manipulation, distribution, the ICT concepts. Okay. So I want us to take a look at this. We had a bullish daily fair value gap here. And this was the consequent encroachment of it. Okay. So this is the bullish fair value gap. So let us take a look at euro. Remember this fair value gap was created last week by Monday and Tuesday. It is the same fair value gap here. And I told you that use the specific dates. For example, this is 30th June 2025. Is this 30th June 2025? Exactly. 30th June 2025. You don't just come and mark those fair value gaps without knowing the dates specifically. You have to know the dates that they have to match. The same day this gap was created, gotta be the same day that this gap was created. Okay, so we have this bullish fair value gap here. So as usual, we had Thursday reversals, even on euro, gold euro, and as you can see on Thursday we dropped down. But take a look at what price did. We never even reached into this gap. We never took liquidity here as majority of traders will be looking for entries below here. But you see, euro, gold euro did not give us that entry. It never took liquidity here. But take a look at what XAUUSD did. That is gold dollar. We took liquidity here, jumped into the consequent encroachment of the 15-minute bullish fair value gap, and then what? Started reversing. You see that? So this is also another SMT, and remember this is happening on a daily time frame. So it is a very high probability. So when Friday comes in, you already know what's up. Friday we should be looking for buys, and as you can see, Friday we opened up here, came lower, and we started moving higher. So it was a buying day because you already knew what was happening here. Like you can see the SMT that happened the previous day. You see, this SMT of daily time frame is very important and very powerful than the SMT on shorter time frames. Because you see, for example, when you use an SMT on 15 minutes time frame, it is only a matter of time. Maybe price has just delayed reaching that area maybe by 15 minutes, 20 minutes, 10 minutes, but automatically, ultimately, it will reach that point. For example, if for example we are trying to trade, maybe book some buys here, and you see at this time, for example, this is 17 p.m. Price is now taking this low. Maybe you'll find that in euro price is taking this low, but on gold you find that price is very far away from taking this low. Believe it or not, it is only a matter of time for XAUUSD to also do the same because it is a shorter time frame. So SMT on shorter time frames can be the reason why some of your SMT trades usually fail. I urge you to use the higher time frame. Guys, this has been my secret on SMT and how I trade SMT between gold dollar and gold euro. You will barely, I don't think this there's even anybody who talks about gold SMT on the internet. Maybe I'm the first person because before there was a time I used to struggle. I used to ask myself like, how can I find correlating pair to gold like GBP USD and Euro USD? How can I have that? How can I have the relationship between DXY and the Euro USD and GBP USD? I searched all over then. I tried looking, but I was the only thing I was finding, people were telling me when gold is going higher, dollar is supposed to be coming down. But you see, that is so chaotic. You cannot compare the chart of XAUUSD and the DXY. It's complete opposite. So I wanted something that gives me clarity. And God enabled me to find this out. And this is what I've been using. If you take a look closely, you'll see these SMTs between XAU USD and XAU EUR, that is gold US dollar versus gold euro. Okay, so I think this will be this for this video, guys. In case you have any more question, uh, uh, just let me know in the comment section. And I hope this video was informative or was helpful to you in your trading, especially for the gold traders. And the same thing you can apply the same thing when trading the indices. For example, when you're trading Nasdaq, Dow Jones, and S&P, they all supposed to be moving together in correlation. Even the Russell 2000, which majority of people doesn't even know that the Russell 2000 holds some secrets. Sometimes when because you see the Russell is like a collective of the Nasdaq, like, and all that. You see, so I think I'll keep that for another video. But still, you can use the same concept, the same thing I've talked about here, SMT, on higher time frames, on Nasdaq, S&P 500, and US 30. Just see how they correlate with each other, but ensure that you're on a higher time frame, because that is what is going to give you the confluences of high probability setup. So that being said, you know that already next week what's going to be happening is buying gold as we go higher. And buying gold as we go higher doesn't really mean that now we're not going to be having reversals or retracement. Okay, a retracement, but it is just a it's going to be just retracement to rebalance price, but not retracement against what the overall bullish move should be. So that's it for this video, guys. Make sure to subscribe, like, and share with a friend who will feel like this is going to be helpful to. And let's meet on the next video. Bye. Cheers.